comprehensive news report, navigating the complex financial landscape. Bond market dynamics, a surge in risk appetite. The bond market is experiencing a significant shift as investors are increasingly willing to embrace risk. Barron's highlights this trend in the bond market shows signs of risk-taking. Investors aren't cowering, where traditional, low-risk bonds are being set aside in favor of riskier corporate options. This move reflects growing confidence in the market's resilience, despite looming economic uncertainties. Complementing this, MarketWatch reports 10-30-year Treasury yields finish lower to close volatile week in bond market, showcasing the fluctuating interest in traditional safe haven assets like U.S. Treasuries. The bond market, once considered a bastion of safety, is now viewed by many as a domain for potentially higher returns, with investors ready to take on greater risks. Economic outlook, a dual narrative. The global economy presents a mixed picture. Barron's offers an optimistic perspective in the economy is fine, the market will be too, suggesting that while economic growth isn't rapid, it remains stable enough to support continued market expansion. Another report, slow down, the economy isn't changing that fast, echoes this sentiment, emphasizing that moderate growth is not a sign of impending recession. However, cautionary voices remind investors of the potential for sudden shifts. The headline, "The question investors need to answer now, what will make you run for safety," serves as a stark reminder that while the market may seem stable, underlying factors could quickly trigger a rush to safety, particularly if economic conditions deteriorate unexpectedly. Global financial risks. China and Europe in focus globally, financial risks are mounting, with China and Europe at the forefront. Barron's highlights a significant concern in China is facing its own retirement crisis, pointing to a demographic challenge that could destabilize China's economy. With an aging population and inadequate retirement provisions, China faces long-term economic hurdles that could impact global markets. In Europe, concerns are growing about fiscal stability. Headlines such as Fitch downgrades Finland's rating outlook to negative and Fitch revises Finland's outlook to negative, cites insufficient debt fixes, reflect broader worries about debt sustainability and economic resilience in the region. These downgrades signal potential vulnerabilities that could have far-reaching consequences. U.S. policy and market impact. The Fed's autonomy under scrutiny. In the U.S., the Federal Reserve's autonomy is a critical issue. Barron's explores this in Trump, Powell, and the Fed's autonomy, discussing the implications of political influence on monetary policy. The Fed's independence is crucial for maintaining economic stability, and any perceived erosion of this autonomy could have significant repercussions on the market. Additionally, speculative policies like Trump's plan for a U.S. Bitcoin reserve looks far-fetched, reflect the evolving nature of financial strategies in the U.S. While this particular idea may seem unlikely, it illustrates broader discussions on the role digital currencies might play in the national economy. Conclusion: navigating a volatile landscape. The current financial landscape is marked by a delicate balance between confidence and caution. Investors are increasingly taking on more risk in the bond market, buoyed by a stable yet slow-growing economy. However, significant challenges, from China's demographic crisis to Europe's fiscal vulnerabilities and potential shifts in U.S. monetary policy, create an environment fraught with uncertainty. Investors must stay informed, diversify their portfolios, and be prepared for the unpredictable nature of the global economy.